So MicroStrategy's average purchase price was a little less than 16,000, and right now, the price is about 33,000. So you've more than doubled your investment, and most likely by the end of the year, we're probably going to be in some kind of bubble, I imagine. So the return will be even higher. And you've said that you didn't buy the Bitcoin to sell it, but would MicroStrategy ever take some off the table when you sense the market is at a top, and then just buy in later when there's another correction? Or do you just plan to hodl through all the cycles, and weather those, whatever 80% downturns when the crypto markets are in a bear market?
Yeah, again, I just disagree with your characterization. I don't expect an 80% downturn. I don't think it's a speculative asset, and I don't think you can quote unquote take money off the table. You're speaking like a crypto trader right now, right? Yeah, I mean, maybe you're doing it just to represent their interest, but I don't see the world that way. I think that Bitcoin is sound money. It's the technically superior asset class compared to the dollar, the euro, the peso, the bolivar, compared to a stock index, compared to gold, compared to silver, compared to everything you can conceivably buy. It is technically, thermodynamically superior as an asset. So when you say things like that to me, and maybe you just do it just to see what I'll say back, I just imagine you preaching to me in Argentina while you're asking me if I'm going to sell the dollars and buy pesos back again as the peso sleeps from 20 to the dollar to 40 to the dollar to 80 to the dollar. Or if we're in, Venezuela. I mean, you think a Venezuelan company is going to quote unquote take some money off the table by selling their US stocks and their US dollars to buy back into local currencies? Or in Zimbabwe, you think they would take money off the table, right? The point is, if you have the superior asset, it's going up forever, Laura. Forever.
Right, but we can all look Bitcoin sort of, as numerous investors have talked about it, kind of breathes, after a halving, the next year and a half after it tends to go up, and then after it reaches some kind of bubble, it kind of sighs a little bit, and then then after the next halving, we see it go up. But so it's this kind of up and down cycle, but the overall trajectory is up. So, and it's not, these are on Twitter, people were asking me to ask you this as well. I think it's a perfectly, natural question to ask.
I think, I don't think Bitcoin is volatile if you're an investor. If you're a hodler, if your time horizon is 1 year, or if it's 1 year, you're a short-term investor. You can find 2 or 3 times in the last decade when it wasn't great, but it wasn't awful. If your time horizon is 4 years, you can't find a time when it wasn't working. So I think, just a normal, ordinary, responsible investor with a 4-year time horizon will look at it and say, this is very boring, right? It's exciting if you're a trader or a journalist, and if you're on Twitter, and if you want the news to change every day. People, and I feel like on Twitter, we've got a hyper-inflammatory, a high-speed, short-time preference, I have to have an opinion every day or every week or every month. And that means everybody's always generating news. And they're all, if I take anybody on the world, and if I take a microscope, and I zoom in, and a magnifying glass, and I zoom in by a factor of 1,000, I'll eventually find a blemish. If you look at Bitcoin trading every week, you'll find a blemish. If you look at it every day, you'll find more. If you look at it every hour, you'll find more. If you look at it every minute, you'll find plenty. But if you zoom out to a decade or 5 years, then you'll have a different view. I really take issue with everybody that attempts to apply some statistical model. I'm not a trader. By the way, to be clear, trading is speculation, and traders see the world in short-term moves, and they're always, and maybe traders love volatility, and traders love controversy, and traders love this debate because it creates that volatility. But this is an engineering issue for me. The year is 1910, people are wiring their houses with electricity, and you're asking me at what point I'm going to turn my electricity off, or you're telling me how eventually people are going to get tired of electricity, and then you're telling me that wouldn't I really want to convert back to horse and buggy and manual labor to take some off the table because electricity is a scary speculative thing. And I'm like, no, it's running water, it's electricity, it's automobiles. It's not a fad, it's the future. It's not a bubble, it's capital flow. When all the money is leaving the peso going to the dollar, that's not a bubble in the dollar. That's capital flight from a collapsing asset or a collapsing currency that people have lost confidence in. Just like the stampede to the internet. Like, would you ask a company, when are you going to stop using the internet? Are you going to stop using it in a quarter because you've used too much electricity and internet? And I would say, and you're like, well, I noticed that your Facebook or your Twitter hits were going down or they weren't as high, so you just have to turn off your thing. My view is this is all just short-term technicality. And by the way, I don't think there's a single trader with all the data in the world that can predict the future. Like, for example, you're going to go and pull every line of data of every second. If you knew every trade of Bitcoin since 2010 to today, how would that be a better indicator of the future if the future is based upon things that are changing? It's like, this is the thing I said to Keith McCullough. Keith wanted to talk about quad models and correlating Bitcoin performance to the CPI and inflation and deflation, and he's crunching numbers. And just the Fibonacci retracement is not going to determine the future of Bitcoin any more than the Fibonacci retracement is not determining the future of electricity, right? And inflation is not going to determine the future of running water. And if the economy stops inflating, or if the CPI goes up by 3 or goes down by 2, it is not going to stop a tidal wave from blowing into your beach. If you're standing on the beach and there's a tidal wave coming, the first order issue is that's a tidal wave. And you're going to tell me, well, in the last decade, all of our statistical models didn't predict a tidal wave, and or something. It's it's irrelevant because it's an engineering phenomenon. So a trader that wants to preach to me about what they think should happen based upon 2017, in my opinion, is irrelevant, right? And let's come back to the key point. If 10 billionaires choose to buy $5 billion or $1 billion or $2 billion worth of Bitcoin each, all of your models are irrelevant. All of your history is irrelevant. It's like everything you think you know how things are going to work out. And how about all the statistics of New York City for the past decade? How relevant are they to predict what happens in New York City this month?
Right.
Not relevant at all. Right. So traders, I can't predict the future. The only way, trading is not a way to make money, by the way, in my opinion. The people that make all the money are people that predict the future. Henry Ford, right? John D. Rockefeller, right? Andrew Mellon, what did they do? They invented aluminum, they invented oil, they brought us cars, they brought us electricity. Andrew Carnegie brought us steel. Mark Zuckerberg, not studying some statistical model. How did he get rich? He kept Facebook stock. He didn't sell it.
Right.
Jeff Bezos, he kept his stock. So at the end of the day, none of this statistics matters. None of the trading matters. None of the volatility matters. These, people that are living in their little world, studying their Fibonacci retracements and preaching with incredible conviction about the upcoming expected 60% retracement or 80% retracement, they're overlooking this fundamental issue, which is if Bitcoin is a digital monetary network, and if enough people with money and power decide to adopt it, it's going to go up and increase by a factor of 100 or 1,000, and there's nothing you can do to stop it. And its past is completely irrelevant to its future. Right? So looking back makes no sense. the only question you got to ask yourself, Laura, is, and here's the question you got to ask, how much Bitcoin is Square Cash going to sell in 2021 on the mobile app? That's the question.
Right.
How much is PayPal
Or
going to sell?
PayPal, yeah.
Because PayPal and Square are going to obliterate everybody else's opinion about what they think should happen, right?
Yeah.
And so, like, I think that too many people in this industry have been around too long, and they're captured by their past, and everybody wants to draw on their past because they own it,